And now this recent bull run from 19k to 22k is quite interesting. There are quite a few similarities to past turnarounds actually. So I made a survey on YouTube, which I often do, and I asked the community, what do you think? Are we more likely to go up to, let's say, 30k? So we did see the turnaround now. Or do you think it's more likely that we're going to revisit the 19k bottoms again? And the answer to this was really interesting. 80% of the respondents said it's more likely that we're going to 19k again. I found this surprising. I thought it's going to be more balanced, but it's similar to what we have seen at prior bottoms. It's very rare that the masses, that most people actually see the bottom when it occurs. Most of the time we have to go further up until we actually see more conviction of most people that we are now actually turning around. Now, how do I see this? I personally like to use moving averages, right? So I back tested several moving averages, which is a technical indicator that follows the trend. So in other words, when the price moved up in the past, it's predicting that the price continues to go up and vice versa. So we are following the momentum, and we try to distinguish the positive and the negative movements with kind of like a buffer, so to speak. Okay, so we're trying to figure out, are we rather in a bull or in a bear? And when we currently look at those best moving averages for Bitcoin or for Ethereum or for altcoins, most assets are currently below their historically best moving averages. So I did back tests. I tried to find out what's actually the best duration of the moving average for each single asset. So if you want to know the durations for each of those assets, that's in the premium membership. So the link is down in the video description. When we now look at all of those, we can find out it's currently probably still best to stay on the sidelines for a while. And this also makes fundamentally sense. The idea is that you do want to wait until all the liquidations have taken place, until all the deleveraging has taken place. And these deleveragings, they happen with a delay, right? We have seen the lunar collapse and then just weeks afterwards, Celsius going down, for example. So the liquidations, the cascading effects, they don't happen instantly all the time. Especially for centralized services, they might happen with 1, 2, or 3 weeks of delay. Meaning, we do want to also be somewhat reactive to that delay. So we don't want to directly buy when we are crashing or directly sell when we are going up. We rather want to wait a little bit and see until the situation clears up a little bit. And so currently with this recent relief rally, where we're not yet sure if those lower prices are still too low to trigger further liquidations that we haven't yet observed, I think it makes more sense to actually wait for this sideways trading range to establish, right? Because what we usually see is when we see these bear markets, we see a relatively prolonged period of time where we are at this lower price level, and only then we recover after we have established some kind of a floor. We very rarely see a crash and a direct straight recovery, like a V-shaped recovery. We rarely see this in crypto. We saw that once, and that was during the Corona crash. But that was a very special moment, because during that time we went down in crypto, in Bitcoin, in a single day by like 40% or so, or like 2 days in a row, combined by like 60% in 2 days. And now we went down 70% from the all-time high in like several weeks. So the current decline is way slower than that Corona crash. And only when we see such an extended cascaded crash as during Corona that was so quick, then I can see we have a V-shaped recovery, because most people then think, okay, this might be now the fire sale. We've never been that low. It's likely that we're going to recover. A lot of people had been forced to sell. When we are just slowly creeping down, there isn't that much attention on the crash. And so recovering in a V-shaped manner is less likely. It's more likely that the dollar cost averagers, the long-term holders, they establish a floor with their continued buying. And that's, I think, what's going to happen here. Meaning there's actually no real rush to jump onto this relief rally. I think it's better to simply just wait 1 or 2 more weeks and then see where the market brings us. if 1 or 2 weeks from now we are suddenly at 25k or so, then I think it's relatively safe to assume that we have found the floor and that we are ready to go further up. But if in 1 or 2 weeks we suddenly get the new news, like that there was another centralized service that suddenly has to liquidate, then we are just continuing further the liquidation route, right? So taking advantage of this delay and not overreacting to current price movements, I think, is key. And so I do agree with most people here that we should be cautious that it's likely, or that it's possible at least, that we go to these 19k levels again. I don't think that the likelihood is 80% or so. So I think it's harder to predict future price movements than what those polls imply, right? When 80% think that we are going down, it's not 80% likelihood that we are going down. It's less than that. But still, I do agree with what most people think here. It's better to be somewhat cautious. But we might simply just go sideways for a while. We might go sideways for 2 or 3 weeks. And if that happens, if we can actually stabilize the current price level and we do not see any crazy bad news again from some player we have overlooked so far that suddenly shuts down, then we might have seen a floor, and then we might be able to go back up from here. Because the situation itself is actually very positive. The setup currently for crypto is relatively positive. Of course, the macro environment with rising interest rates, etc., and with stocks going down isn't that great. But what's great is that we've got a lot of money, relatively speaking, tied up in stable coins. So when we measure the market cap of stable coins relative to the overall cryptocurrency market cap, it's very close to all-time highs. It's around 15% or so. If you just look at Tether, at USDC, and at DAI, you add up all of those dominances, you come to around 14-15%. And that has rarely been that high. Meaning, if the momentum actually does turn around, then it's very, very likely that the subsequent rally would be massive, because there's simply so much money currently on the sidelines that's ready to be deployed. Because why else would you be in stablecoins? The idea why you're still in the crypto world but in stablecoins is to then take advantage of future rallies, right? You don't want to totally get outside of crypto, otherwise you would convert your stablecoin into fiat and also reduce the dominance of stablecoins. But the money stays in those stables. It doesn't go out of the market that quickly. Of course, Tether has lost some of its market cap, but overall, as a percentage of all of crypto, stablecoin dominance is very, very high, meaning if positivity starts again, then the rally will be massive. Currently though, right, I think it's still best, in my opinion, to wait it out for a few more weeks, see what happens. I think it's most likely we will see somewhat of a sideways movement for a while, and then just look at the news, right? If we see continued implosions, then we probably want to further stay away. If nothing happens, right? If 3, 4, 5 weeks from now nothing is imploding and the price is still relatively low, then I think we might have found some kind of a base, because no new bad news is probably good news. That's at least how I see it. Then the deleveraging might have finished and then we are ready to move further up from here. Okay, there's another video also discussing the bear market over here. Hope you see you in that video as well. And thanks for watching this one. Bye bye.